Sawadee good afternoon. It's our pleasure to be here this afternoon with all of you. Our apologies for the delays as we are trying to fix some technical issues. So in this today's session, we'll be covering three sections. The first one will be the performance of our Q3 and year-to-date September, how we are performing. Secondly, we'd also like to update in our outlook for 2023 full year, with Q4 currently in the running. And lastly, we'll also share our long-term growth vision and also some of the key financial targets for 2024. So first, as we go into our Q3 and 9 months of 2023, let's look at our market, how NARTD market performed in the first 9 months and how we are tracking as Arthiv in terms of our share position in this NARTD market. So as you can see there, total south of Thailand, NARTD market grew by 20% for the first 9 months. This was quite a good growth compared to last year that was around 13%. As we are growing 20% for the first 9 months, total Thailand was growing around 12%. That means in our south of Thailand, we are growing NARTD market at a higher rate than the rest of the Thailand. We also see that within the 20% total NARTD share, sparkling was 19.2% growth. Packaged water also grew at a higher rate at 23% and juice 16%. So on the right, as we can see there, we are maintaining our leadership in NARTD with 25.2% market share, a small decline versus last year by 0.3%, mainly driven by two factors. One is the category that we play in sparkling is growing slightly lower pace than the packaged water, where we have relatively a lower share. Secondly, we are also losing some shares to some of the competitors as they have a much discounted pricing in some of the packs that we are not matching pack to pack, but we do have plans to activate some of the packs to compete and get our share back in due course. So when we look at our sparkling share, we are still maintaining around 80%, and water we are making slow but good progress and reaching 7.1% for the first 9 months. So as we look at our 9 months results that we have released to the market, we had a very strong year so far in the first 9 months with total volume growing 8% versus last year, made up of 50.3 million cases domestic sales and 2.7 made to order sales to Thai Namtip. Shares, we already talked about it. Sparkling solid market share around 80% and NARTD 25.2%, Namtip 7.1%. In terms of the other operating KPIs, we are doing very well in terms of expanding our zero sugar categories, growing almost 47% for the first 9 months. Still lots of headroom for us to continue growing in terms of that categories in zero sugar. As we are growing in the various channels, the two key channels that grew at a higher rate than other channels are CVS 19% and HoReCa 57%. Coolers, that is our key strategy to continue placing more coolers in the market. This year we have increased our cooler population by 15% versus last year, meaning that we are placing over 2,000 coolers so far this year in the market. Overall results, net revenue growth of 14.2%, gross profit margin at a decent level at 42.2% for the first 9 months, and very good growth in terms of the net profit growing by 46.4% and margin improving to 8.2% of the revenue for the first 9 months. Some of the details for the Q3 and also for the first 9 months. We will not go into a lot of these details. I wanted to summarize the key message is for the last quarter 3 2023, we grew compared to last year. It was a bit softer quarter than quarter 2 because of some weather and also other elements. However, we were growing quite decent rate with volume growing 2%, revenue growing 6% ahead of the volume, and the net profit was growing 21% for the last quarter 3. And our operating net profit margin rather was 7.2% for the quarter. As we go into the first 9 months, as I was explaining, 8% volume growth that came from a combination of 5% domestic sales volume and a higher shipment to Thailand tip for the first 9 months, and that was growing to 2.7 million cases compared to 1 million cases last year for the first 9 months. As we look at the revenue, we are growing 14% ahead of the volume at 8%. That price mix benefit of 6% point came from 2 factors. First one is our continuing focus on the revenue growth management, where we have taken some of the price increases since August 2022. We are getting that benefit for the first 8 months of this year. And also we had around 1.5% price increase in average in April. So that is helping us to drive our revenue ahead of the volume. In addition, we are also selling a higher proportion of single serve pack as the tourism recovers. We have higher growth in the CVS, and there we sell more immediate consumption packs. So that also helps to drive our revenue ahead of the volume. Gross profit, 20% increase versus last year with help of the revenue growth, and also we are enjoying some the lower packaging cost and efficiencies in the productions. Our SG&A increased by 14%, almost in line with the revenue, mainly in 3-4 key areas: increase in investment in sales and promotion marketing expenses, transportation cost, employee expenses, and we did have one-time expense of around 10 million baht for some of the unused machines that we made an impairment provision. All in all, our net profit grew by 46% for the first 9 months, and we are currently at 8.2% of the net margin of the revenue for the first 9 months. Some of the key highlights in our balance sheet, and next will be the some of the other ratios. Firstly, in terms of the balance sheet, the increase of around 600 million baht in total assets mainly come from our investments in our PET line number 3 in Phnom Penh that we updated last year, which is completed in quarter 1 of this year and is operational already. Same goes for the liabilities. Mainly, we have some long-term loans to fund for the PET line 3. Currently, our long-term loan is around 280 million baht from the bank. In terms of the cash flow, relatively a good level of cash from operations, 983 million baht generated. Of that, we use 702 for financing activities and also for the investment activities, mainly for the lines and so on. Some of the ratios, as we do have a strong growth in our profitability for the company, we are having a strong return on assets and return on equity. As we can see there, our return on equity for the 9 months is around 15.6%, and return on asset 11% higher from last year, where it was 8 and 11% respectively. Our debt to equity ratio is around 0.69. Is a pretty okay level, and also our interest bearing debt is 0.21. On the right, as we see our activity ratios, we continue to make good progress in terms of reducing our cash cycle days to around 24 days for the first at the end of quarter 3 this year, and that is mainly driven in 3 areas, with the inventory period down to 30 days, 30.8. collection period. We continue to focus on collecting our debt on time, account receivable, so that is helping there. And average payment period slightly increase. So with that, our cash cycle days is 24 days. Is one of the lowest in the recent times. Interest coverage at a pretty good level of 73. So some of the initiatives that we have implemented in the marketplace, we wanted to share. First one, very important, is launch of the recycled PET. We have started that in mid-October this year with 1 liter PET pack in some of the modern trade channels. And that is basically made from 100% recycled PET. And we will continue that journey in 2024 and beyond. Some of the new products now is a relaunch of Fanta Dang Manao. Is another flavor in Fanta that we expect to be a long-term player and helping our overall flavor volume and business in the south of Thailand. Some of the other new products that you have seen, the notable ones are continuing innovations on Coca-Cola Zero. Some Sprite Zero as well, and also we have a product, new product launch that is doing reasonably well in the marketplace, and some reformulation in Schweppes, providing zero sugar variant for our consumers. So that was the summary of our performance for Q3 and the first 9 months of this year. Now, we also wanted to take this opportunity to update 2023 outlook with Q4 still in the progress. So our plans in terms of the core business and our real estate business, they are pretty much in line with what we have shared. Our focus continues to be in driving our margins through price and pack upside that you saw. At the same time, in terms of dynamic distribution, we are really focusing on upgrading our capability and also our business in HoReCa channels as the tourism is resuming in the country. We're also focusing on zero sugar coverage and expansion. As you can see there, we are having a good growth in that categories. At the same time, in the new product, we are selective. We are not innovating many products, but what we are doing is in a phased manner and in a more disciplined way than in the past. And some of the new products are doing very well in the market. In terms of the market leadership, continues to be around 25 to 26% level, decent one. Real estate, as we shared in the past, our aim there is to explore, and we are progressing well in terms of our housing project in Hard. This is our first project in the real estate business. In terms of revenue, quite a long narrative. So just wanted to share with you that at the beginning of this year, our business plan target that we shared was for the revenue to grow in the range of 6 to 8%. With a very solid growth in the past few quarters, we have been updating our growth targets from 6 to 8% range, followed by 7-9, and the last time was a 9 to 11% growth for the total group. That does include revenues of the HTC commercial and HTC food and beverage for 2022 and 2023. I think there's a typo there. It should be 2022 and 23. These are discontinued operations to subsidiaries. However, for the comparison purpose, we are sharing with you that our total group company revenue growth is 10 to 11%. Is expected. That does include discontinued operations revenues that is no longer reported in the revenue line because they are discontinued operations. So for the reported one, our total revenue growth that does exclude the HTC commercial and HTC food and beverage in the revenue line, that is expected to grow in the range of 13 to 14% for the full year. So quite a strong growth in the revenue realization for us that is backed by a good growth on the volume and also very good level of work that we have been able to do in the market, pricing and also improving our pack mix. Cost is our continued focus areas. Our gross profit level, as you saw, is well above 40%, and that is something that we want to kind of target to realize in the years to come to have a gross profit margin of 40% and above. In terms of the 2023 challenges that we have managed was the sugar tax phase 3 that was in place from Q2 this year, that was managed fully through RGM and other efficiency measures that we have in the market. Now let's look at our long-term growth vision and also some of the key targets that we wanted to share with you today is starting with our long-term growth vision that we have shared in the past. Our aim is to reach around 11 billion baht revenue or 90 million cases volume by 2027, as we have 4 more years to come. And then reaching around 15 billion baht by 2032 or 120 million unit cases. That is to say that from 2023 or 2023 base until 2032, we are targeting to more or less double our size of the revenue and the business. And these are important and is a high growth. However, with what we have done in 2023 and with the opportunities that we see in the market, we believe that those targets are attainable. Now, with some of the focus areas would be maintaining our leadership in the sparkling at around 80%, which is quite good and strong. And also important to mention continued focus on driving our zero sugar portfolio, which is currently around 3.5% this year. Next year target is 5%. You will see in the next page, and that we want to further grow that categories to around 10% mix by 2027, and there's a lot of new innovations there into that space to help us to attend there. Now, still we are a bit slow in this area. Water, we are making good progress. We're also looking at reintroducing some of the mineral water brands that we had in the market to a new level in 2024 and beyond. And also, we will be continually working with the Coca-Cola company to get into some of the other categories. You know, obviously the coffee is one. They also have many other variants of the tea beverages. So we will be looking at that. And this is the way where we aspire to grow our NARTD value share from around 25% now to 30% in 2027 and then 35 in 2032. So some of the key targets that we have set for 2024, we have this approved at our last board meeting. So I wanted to share some of the key focus areas. Obviously, there are many more KPIs for us. But we wanted to share some of the key highlights of our KPIs for next year, starting with brighter tourism outlook. The country expects to welcome almost 35 million tourists, foreign tourists, in 2024. That is more or less going back to the 2019 level. I think there may be room to have more than this tourists based on what government is doing in terms of waiving the visas for many new countries in the last few weeks. So that 34.5 million foreign tourists is expected to be around 22% higher than this year, closing around 28 million. Some of the top countries, as you know, would be in Malaysia, South Korea, Russia. India is a new one that has a visa waiver and which a lot of new tourist arrivals from India. China, there is still a bit of a slow there that is expected to increase in 2024 and beyond. So that's the first positive outlook that we have. The second one is our continued focus from some of the things that I shared earlier, starting with zero sugar volume growth this year being around 47% in 2023 to another 40 plus percentage growth next year. That will take us our zero sugar contribution to 4.5. Still, we see that there's more opportunities to drive that further in terms of making it available, communicating to the consumers, and so on. While our IC packs with immediate consumption pack that is below 500 milliliter and below, that is expected to grow at a higher rate than our future consumption pack, and expected is around 10% growth on the IC pack. Increased cooler placement, we will be definitely looking at taking the cooler placement to a next level in the next few years. Still, our cooler population in the marketplace is below when we compare that with some of the markets in the region, and also Thailand Tip, which is our colleague in the north of Thailand. We see a lot of opportunities there to place more cooler in a disciplined and controlled way. Glass business, very, very important initiatives. We have already started investing a big amount of capital into this business, relaunching with a new line that is expected to be operational in Q4 next year, almost 800 million baht investment to help us to grow this package glass and then returnable and non-returnable glass in some of the important channels, including HoReCa and the food shops. That will be relaunching in Q4, and we'll have more capacities to produce other variants of the product, including juice and so on, once we have this line operational. So a lot of focus into that. In terms of the overall financial targets, volume growing between the range of 4 to 6% is our current expected range. Revenue growing ahead of the volume by 2 percentage points, between 6 to 8%. We will have a benefit of this price increase in April that took place in Q2 this year. So we'll get some benefit of that in the next year, initial few months. Also, we will continue to drive more immediate consumption packs, more than the future consumption pack. That will help us to drive revenue ahead of the volume. Gross profit, there will be some headwinds in terms of the COGS forecast, sugar price increase that is already in place, plus also expected rise in the empty can prices. We will continue to manage that in the best way we can to realize the gross profit margin of 40 percentage plus points in the 2024 and beyond. So one remark there is, phase 4 sugar tax is in Q2 2025 at this point in time. That is something we'll start to work in 2024 with the government stakeholders on different mitigating plans, not only increasing the price, but also looking at other efficiency measures in terms of mitigating that impact. That will start in Q2 2025. I think that's the end of our presentation today. Hopefully, you got to know some of our focus areas in 2024, and also how we expect to close 2023. Happy to take any questions or feedback or comments from you in the next few minutes. Thank you.
We have 12 minutes left.
Sure.
There's a question like so for the Q4, the trend of Q4.
Okay, sure. Q4, we are doing well, reasonably well in October and November. No, we will not be able to disclose the exact percentage growth. We are expecting a decent quarter in Q4, considering the fact that, in some of the areas in southern region, more than in the north, There has been heavier than expected rains and floodings and so on. So we are working very closely with our branch offices to ensure that we have enough product deliveries. No impact in the supply chain, just to confirm that. Some impact in some of the traditional trade in terms of space and so on. However, we expect a decent Q4 this year, and that will help us to close 2023 at a very good level.
สำหรับ Q4 นะคะทางซีโอแจ้งให้ผู้ประกอบการระดับที่นะคะถึงแม้ว่าจะมีการเตรียมการในเรื่องของว่ายังไม่ก่อนนะคะตัวฝนตกหรือมีอากาศขึ้นแปรปรวนค่ะแล้วก็เตรียมที่จะส่งสัญญาณให้กับทางลูกค้าเราได้เต็มที่ซึ่งคิดว่าใน Q4 ก็จะเป็น Q4 ที่ดีค่ะ For the next question, for the utilization rate, what is the utilization rate of the line?
Yeah, I mean, our utilization rate differs and is different by line. Let's say that the PET line, including the third PET line that we have installed since beginning of this year, the current utilization of the 3 PET line in total is above 65% of the total, let's say, the capacity. Now, with this line, we expect that we'll have enough capacity for the next 4 to 5, depending on the volume growth. When it comes to cans, empty cans, because we are supplying to Thailand as well, so we are almost running full capacity. RGB, we are going to relaunch the whole business in Q4, so we'll have enough capacity when the line is operational. Currently, it is underutilized, the RGB line. Thank you.
ก็คือทั้งหมดอยู่ที่รวมประมาณ 15% ของปลายแคนก็เป็นและที่นี้เราจะมีปลายตัวนี้ก็จะมีการชิมก็คือเชิญโบว์กลาสต่อไปก็จะเป็น Next question is about when the new glass bottle line COD.
Yes, we are already preparing infrastructure upgrade for the operations of this line. Our expected commissioning date and operational timing is in Q4 this year.
For the next one, the glass bottle products are not quite popular in the market. So if the company try to push this product to the market, there must be a lot of marketing costs. Do the company have any guidance for the percentage SG&A for the next year and forward?
Battery is running low. Yeah, it's very important and valid questions. Returnable glass bottle, it has few elements. Yes, you are right that our current volume is low. We do believe there is a lot of opportunities to expand the RGB, and it's also we have to take into account that this is not only the returnable glass business. This line will also allow us to have non-returnable glass bottle, which is quite popular in some of the markets in Europe and some other areas when it's done well. So we expect a improved mix of this returnable and non-returnable glass business in the next few years to come. Just for comparison, even in Thailand territories, they have almost 20% of the total business that they have in Coca-Cola is done in returnable and non-returnable glass bottles. So ours is around 5%. So just within Thailand, we have that difference mix of the returnable glass business and the non-returnable glass business. So we believe that is opportunity. Secondly, it will also help us to address our focus on environmental initiatives where this glass will be returnable glass bottle, so we can use for many more times compared to the PET bottles. The third one, in terms of the operating expense, I mean the SG&A for the returnable glass bottle, it will not be a big volume in 2024, so we don't expect this business to impact our SG&A ratios. We'll have to prioritize some of the investments from our existing pool of the marketing investment plan to relocate some of the funds to drive this new business. So overall, we should be able to manage the SG&A in line with what we have currently.
ค่ะ What would be product category to expand selling to drive market share from 2% to 25% to 26%?
Okay.
That is 80% already, not easy to expand further. Could you share the idea how to grow?
Sure. Yeah, so we have a couple of thoughts on that. Obviously, our market share is very high level at 80%. However, in the south of Thailand, we are the market for the soft drinks. We believe that we can further expand the size of the total sparkling business to a next level. When we compare our per capita consumption in some of the growth markets outside of Asia, we are still having opportunities to continue expanding on that through new innovations, zero product categories, and so on. So as we expand the mix of the sparkling volume, obviously our share will increase in the total NARTD because we expect the sparkling to grow at a higher rate than other categories. Secondly, we will continue to focus on driving the water. As you know, we still have good room for us to continue growing from current 7% to next level to 8, 9, or 10% in the next few years on the water. Plus, we are also looking at introducing some other new categories that we have to work with the Coca-Cola companies. With all of that, we expect to continue growing our NARTD market share.
So, do the company have any plan to add a new can line?
Yeah, can line, important one. We are looking at that. The surge in the volume requirement from Thailand Tip, we are working with them for how long do they need us to supply that level of cans. They may upgrade their own line in the next few months, which means their demand may not be as high as that was in 2023. So depending on that, we will be looking at doing some upgrades in the can lines either in 2020, end of 2024 or potentially in 2025.
Ultimately, what is the expected level of RGB to the total sales?
Yeah, I mean, it's a good question. We don't have a fixed number. Our aim is to continue growing that from current around 3 to 4% level to around 10% mix in the next 3 to 4 years and taking it to the new levels with the introduction of other variant. We have to remember that this line, once installed, will not do only sparkling, but also will be able to do returnable, non-returnable products in juice and water. So we are starting to work on that with the Coca-Cola company already. Thank you.
Yes, the next one would like to follow up for the real estate.
Yeah, real estate, we are doing it slowly. I mean, this is the only one project that is active at this point in time. We have almost completed the sale of the first phase of housing. We are currently in the second phase. The first phase was 13 units. Second phase is 28. We expect to sell more than half of that second phase housing in next year and then remaining in 2025. So we are a bit slow on that, but overall we are on track. Thank you.
Is there any plan that we will adjust the selling price?
I mean, that is a continuous process. I mean, we are working on that. Obviously, there is a sugar tax increase in 2025, so we'll have to engage with the stakeholders on some of the mitigating plans. I mean, the price increase is not our first choice, but if we need to, we'll have to adjust some of the prices as a regular practice. So at this point in time, we don't have a definite plans, but we will be looking at that in 2024.
All right. So for the PET line 3, how much speed can be produced faster than the old one?
It's a very high speed line. It's a 1,000 bottles per minute line compared to around 600 to 700 that we have in the other two lines. 1000 is when we run 1050 actually, when we run 500 milliliter PET package. The larger pack will be slightly lower, but yes, that's the comparison. It's a very high speed line indeed.
Yes, so they would like to know how much for the depreciation cost for the new line and with the what the time frame that company should expect a break even.
Well, with the PET line, our break-even estimate is in less than 3 to 4 years in terms of the payback period, if you're asking that. In terms of the depreciations, it's not significant. We'll be able to manage that with the increased sales revenues and the products that we are going to be producing. I mean, total investment was around 1 billion baht for the PET line, including infrastructure upgrade. They have different depreciation period, but that's not something that is huge and that will not impact our overall margin expectations.
What is your strategy to adjust or adapt the packaging to respond to the customer need?
Yeah, I mean, we have different pack sizes. That is something that we will continue to look at, work with the Coca-Cola company to adjust our pack sizes on a regular basis. And you have seen that continuously in the market. Yeah.
30 seconds.
So hopefully we are able to address some of the key questions. Our apologies if we could not address all the questions. However, if there are any remaining questions, we'll be happy to share that different ways in writing or another call. So thank you all for joining today, and you have a great day and week ahead. Thank you. Sawadee krap.